Hello, Premium Hunters, and welcome to another episode of my Portfolio Performance Update. It's a new week and a new month in a year that only just started a month ago. This update is for week 6, which is February 3rd through the 7th. My name is Andrew, and I'm here to give you better options. I've been options trading for over 25 years, and I'm consistently making over $5,000 a week in profits from my trading. And this is where I pull back the curtain to show you exactly what I do and how I do it. I post these update videos each week, typically on Mondays. So if you're interested in following along on my journey, make sure you like, subscribe, and hit that notification bell so that you can be notified every time I release a new video. Before we get started, just a quick disclaimer that I am not a licensed financial advisor. The information provided on this YouTube channel is for educational purposes only and should not be considered financial advice. Please consult with a qualified financial advisor before making any investment decisions. So why am I doing this? Well, first, if you're new to options trading and want to know if it's legit, I'm giving you the ability to see real results from a real trader. I'm documenting these trades in real time so that you can see that they are legit. And second, my goal is to build a community of like-minded people. People who are interested in options trading. Anyone from the newbie who knows nothing about options to the experienced trader. There is a lot to learn about options trading, and this is just a great way to learn, and we can learn a lot from each other. So here's what I'll be covering in today's video. First, I'll show you each one of the trades that I closed for the week. I'll pull up the stock chart for the security I traded along with my annotations which illustrate the strategies I used. I'll give you a basic overview of the strategy and show how it performed, including the profit and loss I took from the trade. I will then tally up my trades for the week to show you my total profit and loss for the week, and then compare that to previous weeks to see how it stacks up. And finally, I will share any insights I gained from my analysis. If you're new to options trading, I highly encourage that you watch my Options Demystified video. This is where I cover the basics of options, basically what they are. And this will give you a good foundation for what I'm about to cover in today's video. You can find the link in the description below or click on the screen to link to it immediately. Now, before we get into this week's trades, here's a recap of how I did in previous weeks. Last week was my best week so far, and I was able to bring in just over $27,500 for the week of January. My weekly average is sitting just over $5,500 so far for the year, so how will this week's performance stack up? Stick around and find out. So the first stock that we're going to take a look at that I traded was Palantir, and that was by far my best performer. As you can see, I did quite a few trades on Palantir this week, but at the same time, I do have to admit something here. I made a mistake. I broke my own rules, but let's take a look what happened here. You can see the first trade here, which was opened on the 30th of January, was a weekly wheel trade, and I sold a put at $77 at a $77 strike price. It was set to expire on the 7th, and the mistake that I made was that earnings was being released at the opening bell on the 4th. Now, fortunately for me, those were very good earnings reports that had a very good impact on the stock. You can see that it actually gapped up here. As soon as the market opened, my order to close the trade at a 50% gain closed out immediately, and I ended up getting way more than the 50%. I think it closed out at like a nickel. So I almost pulled out all of the premium from this trade. And so I ended up making $1,271 on this trade. But again, I just got lucky on that. That could have gone in a total opposite direction. I typically do not enter these trades just prior to earnings. If the duration of the trade is if there's going to be an earnings report within the duration of the trade, then I will wait until after the earnings report comes out. And there's two reasons that I do that. Reason number one is because earnings reports are what we refer to as binary events. Binary meaning that one of two things is typically going to happen to the stock. It's either going to go significantly higher or it's going to go significantly lower. And when we're putting on these types of trades, we don't want that. We want the stock to stay pretty much where it's been trading, maybe move a little bit, that's okay. We certainly want it to go in our direction. If it's a bullish trade, we want it to go up. If it's a bearish trade, we want it to go down. But we just don't want it to move too far in the opposite direction because that can put us at a major disadvantage. The other reason is because as we go into earnings, there is uncertainty about the performance of the stock. What is the stock going to do after the earnings report comes out? And because of that uncertainty, you're going to see volatility expand. The closer we get, it's going to gradually get bigger and bigger and bigger. Volatility is a major factor in the pricing formula of an option. And when we're selling options, we want to sell high and buy low. We would prefer to sell when volatility is higher and buy when volatility is lower, because that means we're selling the option when it's priced higher and buying it back when it's priced lower, making our profit. Typically, right after the earnings announcement is made, that's when you'll see a crush in the volatility. Volatility will come back in. And that's when I'll be comfortable with putting on the trade again. It's going to be another 3 months before we have another earnings report. And so that's when I can start trading this weekly wheel again, or other trades where I want to sell high and buy low. So in any event, it worked out for me. I got lucky. I made $1,200, almost $1,300 from that trade. I'm going to go to the next slide here, which will zoom in on these other trades. Since they're bunched up right now, let's go ahead and zoom in a little bit so that we can get a better view of the other trades that I did for the week. So immediately after I was closed out of this trade that made me almost $1,200 or $1,300, I sold another put for $99 strike price. And as you can see, by the end of that day, on the 4th, I closed that out for $272, just over $272. And that was not a 50% profit. You can see that's a little bit lower number on my profit there. And that's because it wasn't the full 50%. But if I see that I have a pretty good profit before the end of the closing day, especially when I just opened it on the same day, I'll go ahead and close it out, even if I don't reach my 50% profit. And that's because you just never know what's going to happen the next day. That profit might completely go away and you might be looking at a loss the next day. So I figure I'll just go ahead and close out that trade, take the profit, run with it, and then open the same trade or a similar trade. And so what I did is as soon as I closed that trade out, you can see here I opened another one. This is where I sold a put for 102. And that remained open for just over a day, where I was able to close it on the 6th for a $413 profit, at which point I sold another put at a 104 strike price, and that one closed the same day for another $317 profit. Now this was the same situation. I was at the end of the day, the stock was pretty much at the same level. It hadn't moved much, but it did start to rally here, which allowed me to take a profit. It wasn't the full 50%, but it was a good profit, and I decided to take that money and run. I immediately opened another trade where I sold a put for $107 strike price. And as you can see, that one sold the very next day for another $362 profit. And that's when I opened one more trade at a $111 strike price, which is still open right now. And as of the close of Friday, that dipped slightly below my strike price. It closed at, looks like, at a 110.83. And so we'll just have to see how that fares next week. I may end up buying some shares of Palantir if it doesn't recover above the strike price, or it might recover and I might end up getting some profits from it. So at the end of the day, or at the end of the week at least, Palantir treated me very well this week and generated my biggest source of income for the week. But let's go ahead and move on to the next stock. All right, so the next stock is NVIDIA, and you can see here that this is not a weekly wheel. This is actually the only trade for the week that was not a weekly wheel trade. This was a credit spread, a put credit spread to be exact. That's what the PCS stands for. And this is where I sell a put and then I buy a put at a lower strike price. And so what this does is it converts it from an undefined risk strategy to a defined risk strategy. Just the fact that I'm buying a put here limits the amount of risk. My loss on this trade is limited to $6.67. That's my max loss per contract. Whereas on a short put, my loss is unlimited. So you can also see here that I have a break-even point, which is $108.13. So if the stock was to sell off and come down and touch that price level, that's where I would break even on the trade. If it hit that level and remained at that level until expiration, then I would just end up breaking even. If it went below that level, I would end up losing money, and how much I would lose would depend on how far below that level it went, with the max obviously being $6.67 per contract. But as it turns out, it looks like I sold this put credit spread at the perfect time because NVIDIA ended up rallying, and I was able to close it out just 4 days later, which is phenomenal for this type of trade because typically on a credit spread, I'm expecting to be in a trade for about 2 to 3 weeks. This one, I wasn't even in for a week when I was able to pull out my profit of $457.20. All right, so let's move on to the next one, which is Google. And this is another weekly wheel trade. All the rest of these trades are weekly wheel trades. This is where on the 5th of February, I sold a put for a $185 strike price. It pretty much traded sideways, and then I was able to close that out for a profit of $508. At which point I immediately opened another trade where I sold a put with the $187.50 strike price, and that one expires on the 14th, so we'll see how that does next week. The next trade is in Amazon. So this is the trade that had the longest duration of all of my trades for the week, and as you can see, I opened this trade way back on the 31st of January and just closed it out on Friday. Now here's where I made yet another mistake. It was the same mistake I made in Palantir. It's where I missed the fact that there was earnings within the duration of the trade. Fortunately, I got very lucky in this one because at the opening bell, this trade closed out with my 50% profit, generating just over $1,600 profits, and immediately after that sold off. Had it not closed out right here at the last minute, you see that it ended up selling off. I would have had to buy the stock at $232.50 when the stock was trading right down around $230. So yeah, I would have had to have bought the stock, but that's when I start selling calls. Would it have been the end of the world? No, I actually expect this to happen, and I have no issues with this happening because all of these strategies I'm doing on stocks that I don't mind owning. I want to own these stocks, and if I end up owning these stocks, I'm perfectly okay with that. But at the end of the day, I broke my rules. It still worked out for me, and I ended up making a profit of just over $1,600. If you want to learn more about this wheel strategy, I do have another video linked in the comments below. It's an introduction to the Wheel of Fortune. It talks about how to trade this strategy, so I encourage you to check that out. Anyway, that's the last trade for this week, so let's go ahead and tally up our results to see how we fared for the week. So the first trade that we had, and let me go ahead and explain this table to you. The first thing we show you here is the symbol for the stock that we traded on, the strategy that we used, the WW stands for weekly wheel, the amount of profit that we made for that trade, in this case it was $1,271, how many days it was open, the profit per day, which is basically just the total profit divided by the number of days, the return on capital. So how much return did we get compared to how much capital was tied up? So we basically just take the profit divided by the total amount of capital that was tied up, and that gives us our return on capital. And then the last number is the annual return on capital, which is this number annualized. If I was able to repeat this over and over and over again for the entire year, I would be able to realize a return of over 400%. So that was the first trade of the week. The second one was another Palantir where I made $272.21 in one day. The next one is a Palantir trade where I made $413 in 2 days. Then next we had the Google trade, the weekly wheel, where we made $508 in one day. Another Palantir trade where we made $317 in one day. An Amazon weekly wheel trade where we made $1,618 in one day. That's another one where I got lucky. The NVIDIA trade, this is the call spread where I made $457 in 4 days. And I want to point out to you the return on capital and the annual return on capital. Those are some huge numbers, and that's because this is a defined risk strategy. One of the advantages of a defined risk strategy is that it uses less capital. Your broker is going to require that you put up less capital if you have less risk on the table. That makes sense. The more risk you have, the more capital they want you to put up to protect them. So if you have a defined risk strategy, they require less capital, which is going to give you a higher return on capital and a higher annual return on capital. So those are some pretty massive numbers there. And this is the last trade that we put on for the week. It's the Palantir trade where we made $362 in one day. And so let's go ahead and tally up our totals for the week. So let's first take a look at our average return on capital for the week. It was 396%. Our average return on capital was just over 3%. The average profit per day was $283.29. We were open for just an average of 3 days, which is that's a very small average. 3 days is a great number. And the thing you have to realize here is that the quicker we can get in and out of the trades, the faster we can redeploy our capital, which means we can be making more profit with that capital. So getting in and out quick is definitely the optimal scenario. Of course, we can't always predict how fast we can get in and out of these trades, but just know that if you can do that, you're going to be able to greatly increase your performance. And then finally, last but not least, how much profit did we make for the week? Grand total of $5,219.94. So how does that stack up to our previous weeks? Let's go ahead and take a look. So it was actually the lowest profit that we had for the year so far. Now you may think, well, week 1 or week 3 was actually lower. And at first glance they are, but week 1 was only a 2-day trading week. If we had the full 5 days, then that number probably would have been significantly higher than the 5220. Now week 3 is a one-off. It does show a loss, but if you took trades that were associated with trades that were closed out in week 3, but these associated trades were actually closed out in previous weeks, actually in the previous year, that showed a lot of profit. And if you took those trades and combined them, you would be showing an overall profit. But those trades were closed out in previous time periods. These trades were closed out in this time period, so it does show a loss. And so that's just the way the cookie crumbles. That's the way I report it. But at the end of the day, I am considering my week 6 performance of $5,220 my lowest performance so far for this year. And if you compare that to my weekly average prior to this week, it's about $300 less. The weekly average prior to this week was about $5,500. And once you include the results for this week, that brings the weekly average down to $5,466. And then the total for the year right now, we're sitting at $31,791. But hey, $5,220 really is not too bad for about 2 to 3 hours of work per day. So anyway, that's it for this week's update. Thank you for stopping by and checking it out. If you have any comments, please write them in the comments section below. I'd love to hear from you. What do you like? What do you not like? What kind of changes would you like to see me make? What kind of topics, options related, would you like to see me cover? Are you trading options? And if so, are you seeing success? What kind of strategies are you trading? I would love to hear from you. And I'm just getting started on this channel. I've got a lot more content to come. So if you like what you see so far, make sure you hit that like, subscribe, and hit the notification bell so that you can be notified of future content. That's it for now. Thanks again for tuning in. And until next time, I look forward to bringing you better options. Bye-bye, everybody.